Opendoor closed Wednesday session up 9 cents at $8.06 per share after reaching an intraday high of $8.80. For a stock that has been under pressure in recent sessions, even a modest green close feels like a change in the wind. Today's move wasn't about a sudden headline or a shock catalyst. It was about something deeper, the company showing progress in real time, leadership making bold moves, and insiders demonstrating confidence at prices where retail investors have been accumulating. This kind of day doesn't just show up on a chart. It's the kind of day that starts to reshape sentiment. The most visible piece of news came from Keith Rabois himself. On Wednesday, he posted a video and a link on X unveiling Opendoor's new buyer experience in Dallas. In his words, "At Opendoor we want you to love your home. Starting today, Opendoor buyers get exclusive benefits, a 7-day home test drive and a 100-day home warranty. This is just the beginning." The post came with a slick clip that actually shows what customers will see. This wasn't just a line in a press release. It was a tangible product rollout, and investors could watch it with their own eyes. A 7-day home test drive might sound like a gimmick at first glance, but for anyone who has ever bought a house, it's revolutionary. Buying a home is one of the biggest decisions a person will ever make. Traditionally, you get maybe 2 15-minute walkthroughs and a lot of paperwork. That's it. With this new program, buyers can move in for a week before making the final call. They can test the commute, see how the light hits the kitchen in the morning, listen for neighborhood noise at night, and actually live in the space. It takes away one of the biggest psychological barriers to pulling the trigger. The 100-day home warranty is just as important. It signals that Opendoor is not a faceless intermediary but a company that stands behind the homes it sells. If something breaks in the first few months, buyers aren't on their own. That kind of assurance can make the difference between a nervous prospect walking away and a confident buyer closing the deal. In an environment where high mortgage rates and economic uncertainty make people hesitant, reducing risk is critical. Launching in Dallas is no accident. Texas has been one of Opendoor's strongest markets, with large volumes of inventory and a population open to trying new approaches. By starting in Dallas, Opendoor can gather data quickly, refine the model, and scale it nationally if it works. Investors get to watch a live experiment that could become the company's next big growth engine. This rollout comes at a time when insider actions are also telling a story. Eric Wu, the company's co-founder and board member, recently bought 300,752 shares at $6.65. It's his second insider purchase since returning to the board. He's not just lending his name, he's putting significant capital on the line at a time when sentiment has been fragile. For many retail investors who follow insider buys closely, that kind of conviction from a founder speaks volumes. It says, "I believe the company's best days are ahead." Keith Rabois, meanwhile, has been making waves on social media with photos alongside President Trump and Benjamin Netanyahu. Some people see the optics as controversial, others see them as evidence of his extraordinary reach. Either way, it highlights something rare, a board member whose network spans Silicon Valley, Washington, and beyond. Rabois is a PayPal Mafia alumnus with deep ties to Peter Thiel, Elon Musk, and other heavy hitters. Having someone with that clout engaged in Opendoor's turnaround adds an element of optionality. Whether it's partnerships, policy insight, or talent recruitment, those connections could open doors, literally. Keith Rabois himself brings fintech and product expertise from Shopify and Stripe. Eric Jackson has been galvanizing retail investors, framing Opendoor not just as a stock but as a movement. Together, these figures give the company a leadership mix that is part real estate, part technology, part finance, and part grassroots energy. That is not a recipe you see every day. Media narratives are also beginning to shift. For years, mainstream outlets framed Opendoor as a risky iBuyer or a Zillow clone. But this week Motley Fool listed Opendoor as a growth stock to watch. That's more than a semantic change. It reflects an evolving perception of the company as a platform with expanding services and recurring advantages rather than a one-dimensional house flipper. When analysts start to use growth language, it often signals the beginning of a re-rating. Even the price action on Wednesday fits this story. After 2 days of cooling off from last week's rally, Opendoor traded as high as $8.80 before closing up slightly at $8.06. The aftermarket was flat. No fireworks, but no heavy selling either. Sometimes a flat after-hours session following a green day is a sign that sellers are exhausted and buyers are starting to accumulate again. When you pair that with a product launch and insider buying, it creates a setup where momentum can return quickly. Kaz's decision to post the actual video and link publicly is significant in another way. Transparency builds trust. Investors can now see for themselves what the new buyer experience looks like rather than taking management's word for it. For a company that depends on online engagement, social media acts as a free marketing channel. Early adopters can share their impressions, and word of mouth can spread fast. This is the kind of organic buzz money can't buy. The macro backdrop remains challenging. Mortgage rates are high, inventory is tight, and affordability is stretched. But those conditions actually increase the value of innovative models. By offering test drives and warranties, Opendoor reduces friction at a time when buyers need it most. That could translate into higher conversion rates, faster resale times, and stronger customer satisfaction, metrics that matter more than daily stock swings. Investors should watch for the next catalysts. Will the Dallas rollout produce strong adoption? Will customer reviews be positive? Will the program expand to other Texas markets or nationally? Each expansion becomes proof of concept. Each positive data point strengthens the argument that Opendoor is evolving from a transactional middleman into a trusted platform. The retail investor community, often called the Open Army, remains a force. Eric Jackson's messaging about retail traders becoming a rising dynasty resonates with people who feel locked out of traditional paths to wealth. The parallels between democratizing home ownership and democratizing investing are powerful. If Opendoor can capture that sentiment, it could build a shareholder base as loyal as its customer base. Put all these pieces together and you see why Wednesday mattered even though the headline number was just a 9-cent gain. It was a day of execution, transparency, and confidence. A day when the company showed it is not standing still. A day when insiders put their money where their mouth is and leadership showed off tangible innovation. The story of Opendoor is still being written. The stock has had its ups and downs. Sentiment has swung from euphoria to despair. But fundamentals are quietly improving. New products are launching. Media narratives are shifting. Insiders are buying. Leadership is signaling that world-class talent is joining the mission. All of these are ingredients for a potential turn. For long-term investors, the lesson is clear. Focus on the substance, not just the stock price. Look at what the company is building, who is buying, who is leading, and how the market is beginning to talk about it. Innovations like the 7-day test drive and 100-day warranty, combined with insider confidence and expanding networks, could be the catalysts that help Opendoor regain momentum and move towards sustainable growth. Wednesday's session may be one of those inflection points where the pieces start to come together. It may not look dramatic on the chart yet, but the groundwork is being laid. When fundamentals improve even as sentiment remains cautious, that's often when real turns begin. With new products, insider conviction, and leadership reach, Opendoor is positioning itself not just for the next rally but for the next phase of its evolution. This is why a modest green close matters. It's not about the 9 cents. It's about what those 9 cents represent: progress, resilience, and the possibility of a new chapter. As investors digest Kaz's video, Eric Wu's insider buy, Keith Rabois' high-profile connections, and a shifting media narrative, they may begin to see the company not as it was, but as it's becoming. And that vision, combined with execution, is what creates value over time.